Welcome everybody to the session today. Delighted to see you here and delighted to see so many here after. We put this on simply because we thought it would be a good thing to do because there's obviously many of you that are in lockdown. We thought it might be good to have a little thing or two to look at during the course of the day. And just let me know you can see and hear me okay, and we'll thanks Stephen. Cheers Wayne. Hope you guys are keeping okay in Hey Ross, thanks David. Yes, good weekend was hard. Hey Shane, good to see you here, mate. G'day, Mark. Stephen, did you get your hi Rachel. Stephen, did you get your stuff sorted out? Drop me a line, let me know how you're going at some stage, and yeah, we'll see where we're at with that. Anyway, let's get on with the session. Obviously, the opinions you're hearing today are mine, not representative of Go Markets, and most importantly, just to recognise that this is for educational purposes only. But as we look at market sentiment, please be aware that not only must you do your own due diligence, make your own trading choices, but also manage risk with everything that you do in trading. And my job here is just to point a few things out to you that might be happening, and give you some things to look at. It is a good time to backtest. That's good. That's good, mate. I like that. Anyway, let's start with what's coming across the news today. US indices ended positively on Friday, although there was a late sell-off in the last sort of half an hour or so, just before the we often see that just before a long weekend. It's Memorial Day weekend in the US, so US markets are closed today. So we may well see lower volumes across, not just obviously not just the fact that the shares are shut, but obviously other asset classes may be impacted as well. US futures are trading slightly higher. Earlier, a bit flat, and Asian markets are quite cautious in early trading. We'll have a look in a moment. The US dollar index is not helping currency markets at all, really. We did have a rebound off support, but we're still stuck in a range. We're seeing more of that today. We'll have a look at those in a moment. Gold was the outperformer, really, during last week. Breaking that 1900 level, which essentially represented 5 months highs. Silver hasn't broken through its key resistance level yet, so gold slightly outperforming. And also in the commodity space, we're seeing copper and oil both move higher after recent pullbacks. We'll have a look at charts of those in a moment as well. Cryptos are looking at a little under pressure. Again, we talked last week when we met on Thursday about how triangular they were looking, particularly Bitcoin was looking very triangular. But there is a key 200 MA, which we need to keep an eye on. And as I said, FX pairs are still range bound in the main. We've had Japanese PMI and industrial production numbers out of Japan already today, and the German CPI figures are out later this afternoon. These are essentially the day highlights in what is otherwise a quiet day, but we are going to ramp up during the week. It is the first week in the month, which is always US jobs data, so we'll have the ADP weekly jobs and monthly in the form of the non-farm payrolls on Friday, and we've also got global manufacturing PMI data out through the week. So it's quite a big week in terms of where the market sits. And if recent economic data is to be followed, there could be a continued uptrend in that, which would obviously help equity markets up further. So let's have a look at some details relating to that. One of our charts open. Okay, so we'll have a look at the futures first. You can see only very mildly positive, not expecting to move a massive amount today. You can see that we've got currency markets looking pretty flat, apart from the AUD, and we'll have a look at the AUD in a moment. We can see oil up slightly on the day, and likewise with gold and silver. And copper, of course, which we've already referenced, which seems to be pulling it up again. And again, we'll have a look at a chart. If we look at the data just to confirm and look at the numbers that have come across already today, really we've had PMI numbers out of China were a bit mixed, possibly a little bit disappointing. There's the NBS manufacturing PMI. Now this is different from the Caxton PMI, which is the one out tomorrow. So this is a sort of wider survey than the Caxton, which is primarily the one that the markets take most note of. But interestingly, there was a nice pop-up in the non-manufacturing PMI data. We can see the industrial production numbers month on month were down in Japan, which sort of didn't help sentiment, even though the year-on-year figures were spectacularly good. That's simply because last May was pretty dreadful. You can see later on there's very little coming out. Some CPI numbers generally across the Eurozone. The German one is the one that the markets will take notice of, I would suspect. But after that, as I said, we've got things ramping up later in the week, so just be cautious. So you can see tomorrow we've got not only the RBA rate decision and GDP out of Australia, but we've got global manufacturing PMI numbers. We've got the unemployment numbers coming out of Europe, and also some manufacturing PMI data coming out of the US. And then, of course, we move into the jobs holy trinity that we've already mentioned. So it's setting up for a week which is going to be should, in theory, be quite influential in terms of sentiment over the next 3 or 4 weeks. It should set up things quite nicely. One wonders whether there'll be any shift at all in currency markets, which hasn't been the case to date. But as I said, we'll have a quick look at charts at the moment, in a moment, on those. So let's just see where the Asian markets are. We'll pop onto CNBC site and get an overview. I haven't looked at these for half an hour, so they may have changed a little bit since I last looked at it. Yeah, they've dropped off a little bit. The Kospi is up. ASX is just below neutral, but you can see the Nikkei looks as though it's losing some steam, which is likely not to me not a particularly good session follow through in Europe, I would suggest. Right, looking at some charts. Close that down for now. Okay, oops. That wasn't what I meant to do. Right, there we go. Okay, so in terms of Friday, you can see there's the Nasdaq just below resistance at 13,731. This is an important level. It was support in April. We'll talk more about the US obviously tomorrow when we meet, and really it's at a key point. If we look at the US 500, I just put the 30-minute chart up just so you could see that late sell-off on a Friday just before close and before the end of the long weekend. So we essentially dropped about another 0.2%, right into the bell. You can see this morning it's really gone nowhere. We did gap higher on open, so that's why we are slightly up on the day in the futures contracts. Look at the US dollar daily. You can see we're bimbling along in fairly neutral territory, as we have done the last couple of days, around this 90 level, which it looks quite keen to hold on to. But you can see really we're in a range that we've been in now for best part of a week and a half, just below 90.21 and above 89.66. And of course, because we're seeing that on the US index, which essentially is made up of a basket of currencies, then not surprising that if we look at US dollar pairs, it's not a dissimilar picture. But a quick look at gold and silver. Here's gold, and you can see we're higher, slightly higher on in Asia today on this contract at 1908. So we took about 4 sessions to break through that 1900 level, and even then it wasn't particularly compelling. But the fact that this follow through is encouraging. If we look at a silver chart, you can see there's a really quite a strong resistance at 28.12, which has been trading underneath for the last fortnight. And but we are pushing against that in Asian trading this morning, as we already intimated. Looking at oil, not only in terms of trading the oil CFD, but where the energy stocks may be. This is the Brent contract, and you can see that $70 is once again been tested. Oil, as we've said before, tends to trade in around about $5 increments. So if we put another line on at 60-ish, and then another line on at about 55, which is there, you can see really how there's always lots of action around that $5 increment mark. And Brent's no different to WTI, which is the same. That trades slightly lower, around about $65 at the moment. A quick look at copper as well. We've talked copper, and we are actually having a special session on copper in a couple of weeks' time. You can see there's accumulation into copper. When we saw it last week, we accumulated down here when it was at its low, took profit at the weekend, and now we're accumulating again into this. Let's just put it on a 30-minute chart. Let's get rid of those trade levels. So let's put on an hourly chart. So you can see on the hourly chart, once it moved back up to that level, which is pretty key on the daily chart as well, as you see, that was the close on Friday. Slightly higher than the previous day. And again, we're getting the same picture today, edging up towards that high that we hit on the 11th. That was 480 essentially, closing high. So edging back up towards that. The way copper's priced, there's still quite a lot of money in this. There's a minimum. The minimum is 0.01 of a contract, and you would expect around about $300 for every cent move if you had the minimum number of contracts in Australian dollars. So just be aware of that pricing if you ever are going to trade copper. We'll have a look at copper stocks in a moment, but let's go to the Euro USD. Start a look around the currency markets. You can see there we're having quite a positive day there. On Friday we dipped down, but ended up closing near the high, right bang smack in the middle of that range. A little move higher on the euro. If we look at the Aussie USD, there was a nice breakout trade not long after Asian, about a couple of hours into the session, we had a move higher, and you can see there we're sort of heading back towards around about 77.30. If we look on the daily chart, you can see really this is within tight range. So we'll just take all these off, and you can see how it's been in this range for really since the beginning of April, of around about 91 pips. So we're trying to take advantage of a bounce here, possibly up towards the middle of this range at around about around about 77.50. We could play it all the way back up to 77.87. but we'll see how we go with that, because these candles have been quite long, so really choppy. You can see there's not many days in consecutively with this. Look at the GB pound US, also testing within a range still, but testing the top end of that range at around about 141.90. And we haven't looked at US yen yet, so let's just find a US yen chart and just see the impact of that. The impact of that data this morning was very minimal. As you can see, again, same, we're trading within a range and have really done since sort of around about the 20th of April. We had one test above it on Friday, but you can see we moved right back down to that 109.60 level in today's session. So really struggling to find any conviction at all in FX moves on anything apart from the very short time frames. If we look outside of the US dollar pairs, for example, we can look at GB pound Japanese yen. The GB pound had a strong day on Thursday, but really on this pair took it up to 156 and then got stuck. So no reason to move higher at all today. Put this on a again, the Kiwi had one strong day on Thursday. You can see that there, but then has essentially given it all back, and we're moving back down to key level at around about 79.35. So again, nothing going on there really of any interest. Look at the US Swiss franc. This was actually a hope for potentially a breakout, but really sort of give it up. You can see there it sort of tested that level at around about 89.50, but then has bounced up as well. Those who like trading a bounce, that's not a bad set of candles to suggest that there may be some upside on this, but I would suggest that it's really very limited. Perhaps up in the first instance around about 60 pips. Just pop it on an hourly chart. The problem with this is that it's moved down in Asian trading, so it doesn't look particularly healthy to the and secondly, as around about 21 pips to that level, and around about 40 pips to that level. So we really don't like the Swiss franc very much. If we look perhaps at maybe the Aussie Swiss franc, again, if we put it on a daily chart, you can see we are trading towards the towards this 200 MA, really with a support which has been in place for the last 6 days at 63.35. So again, same story. Really difficult to eke out any sort of trade, and you don't want to force it. So I'm going to plant my flag as our FX chart of the day in an Aussie USD. We're aiming for around about 27 pips to the upside from where we are now. If we break this level here at 77.50, then it might be worth tightening a stop technically at that stage to the 200 MA or somewhere around that 77.37 level. Then, as we said, the potential upside on this from where we're trading now is around whoa, easy Mike, let's try that again, is around that sort of 50 pip level. But really the other one to watch would be the Euro USD. You can see we're about 40 pips away from 40 pips away from resistance. If we do get a spectacularly low CPI number out of Germany, then we could see that move up, move down and retest that support at 121.28. But obviously we're if we do get a break to the downside, then we'll be looking possibly around about 90 pips. So that's maybe one to just check in on later on, depending on what that German CPI number comes in at. But we'll make our Aussie US the chart of the day. But bear in mind, it is a day where you're essentially, it is a day for the very short-term traders where you're coming in and you're scalping. Okay, so let's have a quick look at what's happening in the ASX. As always, guys, feel free to suggest anything that you want me to have a look at as we go, and likewise, if there's any FX pairs that we've missed, then again, feel free to put them forward. So if we look at the ASX overall, you can see we're trading around about neutral, 0.06% down. Now, the whole market's got their eye on essentially 7,200. We did touch it twice. We touched it there. Did we touch it on open? Yes, we did. So essentially, for those of you who are less familiar, the Aussie market has a staggered open. So for the first 10 minutes, we're actually opening. By 10 past 10, we're all open. You can see we hit that 4,200 mark, which would essentially constitute a record high on the ASX. Possibly a little profit taking going on. I don't think those Chinese manufacturing numbers help much. So we're off the lows of the session as we speak and back towards neutral, but still not looking particularly enthralling. I think there's probably going to be caution across. I would tell you what, we can have a look at cryptos. That reminds me. Let's just have a quick look at cryptos. Bitcoin, there we are. So here's cryptos, and you can see we've broken back through that 200 MA on Friday, and we are actually moving downwards in Asia. So we're looking less triangular, more like a descending triangle. Now you can see those lower highs. So that a break of maybe 35 could see us back down to 30 pretty quickly on Bitcoin and Ethereum. Again, looking to hold on to support, in this case, at around about that 2170 level. You can see how it was resistance here, support here before it had its spike up mid-April. But crypto is certainly not looking like a great place to be from a technical point of view, at least. Okay, so right, so let's look at advances versus decliners. We can see that it's just over 1-to-1 in terms of about 1.5-to-1 actually in terms of decliners versus advances. So not in no way, shape, or form a positive market. We're seeing banks generally to the downside. There's ANZ. The sort of business finance stocks like APT are down slightly. So there's Afterpay. If we come down to the bottom, you see Zip's in a similar position. We've got a nice move up on Xero again. But you can see again the banks are looking ordinary. If we sort of move higher, you can see the insurers are down. Sonic's up a little bit. We might have a look at a Sonic chart. But what we're looking for is there's Rio up, and we'll see also, of course, Oz Minerals up. Not dramatically so, but enough to hold the market higher, and that's quite important, really. CUV is a short. We'll have a look at a CUV chart in a moment. Couple of the one, there's Galaxy up again. We talked Galaxy last week as one of our charts of the day. And we also noticed retail up as well. We'll have a look at JB Hi-Fi because that looks interesting. Okay, so first point. Okay, so CUV is a short, which we've had as a suggestion. Now, I would, as I've said before, I would be very, very cautious shorting this market. First of all, you're going against Hey, no worries at all, Chris. First of all, remember you're going against the market as a whole. And so you've got to be very, very clear. If we look at the actual CUV chart, which has had a great run up, there's not a massive case for going short on this. If we look at the daily chart, I would say this is probably limited to maybe 27.36. Now that's not bad in percentage terms. It's best part of 6% or so, or not 4%. But that's really not a compelling sign there that says this is going to fall soon. You'd probably put this support around about where it is now. So there is 4% there, but remember you're going against the major sort of trend of the market as a whole. If we look at the ASX as a whole, I'll just put this up just so you can see context. All right, catch up with itself. There we go. So we're definitely in uptrend on the ASX 200. As I said, we're closing in on record highs on this. So you've got to have a massively compelling case to go short. Have a look at some of the ones we referenced, or we had a look at quickly there. We're having a look at FMG for a while. Obviously the rest of the resource sector are doing okay, so it makes sense to have a look at FMG, who are underperforming. You can see there, we're really sort of stuck beneath this $23 mark, so FMG don't look like the place to be. BHP weren't looking particularly crash hot, but let's look at Oz Minerals, who are up on the day, down a little weak. If we look at what they've done since open, they dropped and then they moved up, so they're quite bouncy on open, and that's probably due to the fact that copper hasn't moved a lot since open. So it's not unreasonable to sort of expect this move that we've had here, but a lot of that was on Friday based on the improvements in copper price. I think this is a slightly better option than FMG, and I really like this at 25.78. Just for disclosure, I am actually in a small position in this at the moment. We promised to look at JB Hi-Fi, and that's why we like JB Hi-Fi. So again, just you can see it's moving up during the day. It is testing a key level with some vigor at 48.70. So really a move over possibly 49. I would say, hey, look, we're ready to go. Close this gap in the first instance. So that would be a gain of around about just around about 3% level, but that's probably a stopping point around about 5% up. So that looks pretty healthy. We'll pop on Galaxy. So again, Galaxy are slightly up on the day, but you can see they opened pretty well and then just dropped off. Well, that happened with a lot of the market today. We still actually like Galaxy. This is obviously our chart of the day on Thursday, I think it was. Can't remember whether it was Galaxy or Zero. I'll have a quick look at Zero as well, who are up again on the day, looking very, very strong at the moment. Zero, you can see there. We've got another green candle. If we just close where we are now, that just smacks again of more buying pressure. You can see all of the three shorter term moving averages now coming together to point in an upwards direction. In terms of how far this could go, so there was the breakout on Thursday that we really liked. That was why it was our chart of the day. It actually did close close to its high. We'd sort of see this up to around about 139 in the first instance, and possibly even up to around about 147. Linus is LYC. If we look at Linus, which is sort of disappointed a little bit. We pointed this out on, again, this is one of our ones to watch on Thursday. Of course, we've got this nice support in place at around about 517, but we seem to be just struggling to break through this 550 level that you can see is important here, here, and here. So that is just sort of stuck under that key level there. So the last 3 days we've had an attempt to break through. Now, if we were to get, if we just look at a 5-minute chart and just see where this is at. So we ducked down on open, but we've had some buying come back in. This is very reminiscent of the index overall, actually. But if we get a move higher on into the close, to close above this 50 EMA that's sitting at 558, then that would be very interesting and would technically potentially give an opportunity up around about 7% to that previous resistance there at $6.05. You probably put your stop just below, or your profit target just below $6 if you're trading this short term. Right. Afterpay, we were tracking again last week. Yep, for sure. I can put an Afterpay chart up. Where are we? There we go. APT down a little bit today. Seems sort of stuck again. If we just put this on a line chart, you can just see how it's stuck around this 93.65 level, maybe. Actually, maybe a little higher than that. Yeah, around about 94.30. It's stuck below. So we need a break over that line, and if it does, then conceivably up to around about that 108 level. I would actually be a slightly more aggressive than that in terms of an exit, and take it off around about that $100 level, or maybe even just below that 200 MA if you're trading the short term, and that's still around about 6.5%. If you're interested in a longer term, and there's plenty compelling reasons to be, then there's obvious potential move up to around about 109.58. Any others that you guys want me to have a little look at? I know there's been a couple there that you've suggested. Yeah, of course we can look at Qantas. We need some good news to push these travel stocks up higher. You can see we've got an engulfing candle, failed to break that 200 MA. We referenced that last week. That's what we're looking for. You can see how close the 50 and the 200 are at the moment. We need that 50 to stay above the 200 really, and also that essentially a candle to break both to give us a compelling reason to get back into Qantas again. If we were to get in, say, at this level here, then we're only really up looking for a 3.5% gain up to test that $5, which we've talked about ad infinitum, it seems. So not quite the time for Qantas. Let's quickly have a look at Sonic for sure. Trading around $35. So, which is sort of a key level on this. We'll just put it on a line chart again. So it's probably say about that 35, that 35.20 is the level to watch. A break of that, we could move back up towards this 36.30 level, but that's not filling me full of happy feelings either, really, to be honest, in terms of the risks of the current market. To answer another question, I would sort of see on my feeling about where markets, certainly equity markets are, is a drift higher rather than a sort of jumping higher as we've done previously. PLS in the same space as Galaxy. Now this is looking interesting. This is one that I actually haven't looked at for a few days because my energies have been focused on Galaxy. Let's just get rid of some of those lines. So in fact, on Friday, we did actually break a key level, and we've consolidated that. If you were on the ball on Friday and saw PLS at that point there, so you can see a nice sharp move up there. We've got a gap up in trading today, back up to 122. In terms of upside potential on this, undoubtedly that sort of 131 level would be one to watch, which was the high we hit earlier in the month. So that's not a shabby sort of a shabby return, around about that sort of just below 7%. Of course, if we break this 135 level, and all bets are off, and we're zooming to the heights. But this is the other lithium play along with Galaxy. So from the electric vehicle side of things, if that's somewhere where you'd like to have some investment cash, then PLS and Galaxy are probably the two options that stand out in Australia at least. So that's actually not a bad chart there in PLS. Thanks for that. Yeah, I'll put up Rio. We haven't looked at Rio for a little while, of course. So we've got a nice V shape. We got that sort of, with that move up in precious metals, we've got that nice little jump last week. Looked as though we're going to break for the heavens. Again, this is an important level. We closed that on Friday around about 123.65. You can see we did open over that, but back to it right now. So that's not a bad chart to look at. Upside of about 4% in the short term. Any more for any more? Yeah, I can certainly look at Euro Aussie. I'll just be aware of that data that's coming out this afternoon. So interesting, because what we've got is a little bit of disparity here. The daily chart's sitting just below the 200 MA. So that may be resistance on this. It is range bound, like so many. So we've got essentially, well, looks like about a 70, late 70s pip range. Yeah, 78 pip range. I'd be very, very cautious trading upside to here. In terms of, I mean, even if there was a long opportunity, you don't talk 30 pips up to that. But then if we look at the shorter term chart, you can see it's actually looking quite bearish for the day, as we get a bit of strength into the commodity-based currencies. Let's just check back in on our chart of the day for currencies and see how we're doing. Yeah, there's the Aussie. There's the Aussie USD. Looks as though it's still holding up. Just watch for this next level here. As I said, at 77.30. Yeah, we can look at the. It's an interesting one. I haven't looked at Kiwi Canadian dollar for a while. There we go. Kiwi Canadian dollar. Just want to make sure that this is up-to-date data. That's going nowhere. That's, whichever way you slice it, that's a pretty dreadful chart. Okay, so there's an absence of direction. We're trading in a long-term range between, in quite a wide long-term range. In the short term, I would say possibly this is the level to watch. So have we got much in there? If it continues downwards, it's hampered a little bit by this 200 MA, which it's obviously used as a resistance. That's actually quite a good example. That's about 80 pips if it continues its way down. It doesn't look as though it's going anywhere today. And Euro GB pound, yeah. Well, there's a shock. It's in a range. And this is why FX is just dreadful to trade, or just really, really hard to trade anything long term at the moment. You can see we're in a range which have been in essentially all month, of around about 80 pips again. We've got a potential bounce off that bottom if you want to run the gauntlet. of the fairly choppy situation that we've been in. Yeah. So I didn't give a chart of the day. You're absolutely right. I didn't give a chart of the day for share CFDs. So if we look at the ones we had a look at, then I think probably my flag is going to be planted in. We'll keep an eye on Galaxy to see if there's any more upside in that. But we didn't have a look at Macquarie. Just a quick look at Macquarie. Interesting point. We need to see a break of 153.40 on Macquarie. So we're not going to go XRO again, even though that looks like a very, very good chart. We actually liked JB Hi-Fi. So we're going to plant our flag on JB Hi-Fi. On the basis of this move back towards resistance at around about 48.67, we do see a potential upside of around about 5% on this. So it would be with a short-term view, but that's our chart of the day for today. Once it's broken that resistance there, you can see it's trading towards the top of the candle. Not really much point in looking at US stocks, but obviously we're around tomorrow, so be great to have you along for that session. We'll have a little more detailed look around the US stocks. So look, I hope that was useful putting it on. I hope it's sort of giving you some things to have a look at today, even if the hang on, I just missed a. Where would you place a stop on JBH? Well, like with anything, if you are trading a break of a resistance, then you would place your stop below that resistance. You can see the short-term MAs are crossing, which is also quite interesting. So I would probably go use your ATR. Let's just have a quick look at that. 109. So maybe $1.50 below that, perhaps. Actually, the 200 MA would be a really good place to put it. So essentially, your risk on this is around about 2%. So your and your upside potentially around about 6.5%. So what's that? A 1 to 3 risk reward ratio. Because conceivably it could bounce up and down in this range. Maybe even. So what's that? It's $1. It's $1.2022. So that's just shy. You're probably about 1.5 ATR from where you enter. But as I said, I would be looking to possibly get out of this at around about. I'd be really tight, doing a tight trail stop around about that 51.50 level, perhaps even at 51. So once it had closed that gap, technically that would make sense. No worries. Okay, guys. Well, I hope that's useful. Thanks again for rocking along today. Fingers crossed for a shorter or a fairly short lockdown. It's stopping me come over and do my thing. As well, Michael's going to do Melbourne. Hang on a minute. Let's just. I don't think we've had a look at Euro. Aussie. You long or short, Shane? I think we did. Actually, maybe we did have a look at Euro Aussie. Yeah, it looks as though it's topped out on the daily. As I said, because of that 200 MA. But really range bound again. There we go. So it could move its way down to 157.24. Good stuff. Okay, guys, take care. Trade safe. We'll see you again tomorrow. Bye-bye for now. See you. See you, Wayne. Steve. See you, David. And bye for now, Rachel.